Devi of Third BBA here to present about advantages and disadvantages of cost accounting. Cost accounting definition. Cost accounting is a business practice in which we record, examine, summarize, and study the company's cost spent on any process, service, product, or anything else in the organization. This helps the organization in cost controlling and making strategic planning and decision on improving cost efficiency. Such financial statements and ledgers give the management visibility on their cost information. And the next thing is advantages of cost accounting. The first point in advantages of cost accounting is disclosure of profitable and unprofitable activities. Since cost accounting minutely calculates the cost, selling price and profitability of product, segregation of profitable or unprofitable items or activities becomes easy. The second thing is guidance for future production policies. On the basis of data provided by costing department about the cost of various processes and activities as well as profit on it, it helps to plan the future needs. The third thing is to find out the exact cause of increase or decrease in profit. With the help of cost accounting, any organization can determine the exact cause of decrease or increase in profit that may be due to higher cost of product, lower selling price, or may be due to unproductivity activity or unused capacity. Control over material and supplies. Cost accounting teaches us to account for the cost of material and supplies according to department, process, unit of production, or services that provide us a control over material and supplies. Reliable comparison. Cost accounting provides us reliable comparison of products and services within and outside an organization with the product and services available in the market. It also helps to achieve the lowest cost level of product with highest efficiency level of operations. Helpful to government. It helps the government in planning and policy making about import, export, industry and taxation. It is helpful in assessment of excise, service tax and income tax, etc. It provides ready-made data to government in price fixing, price control, tariff protection, etc. Helpful to consumers. Reduction of price due to reduction in cost passes to customer ultimately. Cost accounting builds confidence in customers about fairness of price. Classification and subdivision of cost. Cost accounting helps to classify the cost according to department, process, product, activity and service against financial accounting, which give just consolidate net profit or loss figure of any organization with any classification or subdivision of cost. Correct valuation of inventory. Cost accounting is an accurate and adequate valuation technique that helps an organization in valuation of inventory in more reliable and exact way. On the other hand, valuation of inventory merely depends on physical stock taking and valuation thereof, which is not a proper and scientific method to follow. Decision on manufacturing or purchasing from outside. Costing data helps management to decide whether in-house production of any product will be profitable or it is feasible to purchase the product from outside. In turn, it is helpful for management to avoid any heavy loss due to a wrong decision. Proper investment in inventory. Shifting of dead stock items or slow-moving items into fast-moving items may help company to invest in more proper and profitable inventory. It also helps us to maintain inventory at the most optimum level in terms of investments as well as variety of the stock. Reliable check on accounting. Cost accounting is more reliable and accurate system of accounting. It is helpful to check results of financial accounting with the help of periodic reconciliation of cost accounts with financial accounts to find out adequate selling price. In tough marketing conditions or in slump period, the costing helps to determine selling price of a product at the optimum level, neither too high or too low. Budgeting. In cost accounting, various budgets are prepared and these budgets are very important tools of costing. Budgets show the cost, revenue, profit, production capacity and efficiency of plant and machinery, as well as the efficiency of workers. Since the budget is planned in scientific and systematic way, it helps to keep positive check over misdirecting the activities of an organization. Periodical determination of profit and losses. Cost accounting helps us to determine the periodical profit and losses of a product. Relative efficiency of different workers. With the help of cost accounting, we may introduce suitable plan for wages, incentives and rewards for workers and employees of an organization. The next one is disadvantages of cost accounting. Lack of uniformity. Cost accounting has a lack of uniform procedure. It may bring different results from the same data, so it means that cost accounting has inefficient results. Costly. Cost accounting is a costly process. It requires many formalities to settle down this process and also needs lots of paperwork which makes it quite costly. Ignores futuristic situation. Cost accounting ignores the futuristic situation of the product cost. It only records past cost records, whereas management is taken decision regarding the future thereof. Cost data are not very useful. Uses secondary data. Cost accounting uses secondary data from financial statement for various calculations like standard cost. It does not include primary data or short-term data. That's why costing, it means secondary data. Only bring out the cost of goods. Cost accounting is not able to find the financial status of the company. It cannot determine the operational efficiency of the business and ascertains only the cost of goods. For assessing the financial position, we need to depend upon financial accounting. Unable to determine tax liability. Cost accounting cannot find out the tax liability of the company. It cannot be treated as a basis of calculating it. Financial accounting